All right. Hello, everybody. We are going to do a tutorial today on Fibonacci time. This tool, I remember when I first came across it, it's it's different. I was kind of confused as to how it worked, and where to pull it from and all that. So we'll be going over that today. And keep in mind, like I said, it's not a tool that a lot of people use, and you'll use it in a lot of really advanced technical analysis. So I'm going to do one that's very simple right now, and I'll talk about like what more advanced use cases it has, but it's not something I'm going to do a deep dive on right now. I think things like harmonics and Elliott waves, right? So for the Fibonacci time, you just go in here and you would go down to trend-based fib time here. And this one, similar to Fibonacci extension, which we did in our last tutorial, there's 3 clicks on this one, right? Um, Also, you do not need to use the magnet tool on this one. I personally don't. You just want to be sure you line it up based with the candle. So like what you would do is you would go 1 click, 2 click, and a third click. Okay, and I'll explain like where you would want to do that. So, let's say we have this move up, from here to here, and let's say we want to compare that move up with this one in terms of time and duration, right? So we would go from the low, click, to the high, right? And then this one we would go to the low of this move. So here we can see, okay, today actually marks the same amount of time from here to here is now the same amount of time as from here to here, right? Today actually marks that day. And what you would typically expect is on these markers, you would expect a larger move depending on, where you're looking at. So I'll show you guys a really nice example. Actually, I remember seeing this one. It was actually really cool to see this. So one thing you can do, for example, is say, I want to compare, if I want to go on a weekly, I'm not going to. Say you want to compare the length of this bull run to the length of the next one, right? So let's go to our Fibonacci time tool. So we'll click at the bottom here, and we'll click at the top, right? And then back now to the bottom of this move down. So here's what's cool about that. What we're comparing is the time from here to here. We want to see what is that same amount of time put onto this to this bull market that we had here, from here to here. And you can see the 1-to-1, it it was pretty much spot on. I mean, when you zoom in, you're talking a a multi-year fib time pull, and you zoom in and you can say, wow, yeah, that marked the top within the week. That's pretty amazing, right? To have marked the top within the week of this of this bull market. And like what could you have done with that information? Right? If you want to ask yourself, like, what could I have done with that information? Well, you could, let's say you drew, a channel, and I know I reviewed this, but let's say you drew this channel, from here to here, all the way up to here. And let's just go to like a replay to here. Okay, and I will go to a weekly. I'll go to a weekly time frame, and I'll just double check to be sure that our polls are all set up right. So our low, perfect, and our our high right on the high, perfect, and this one right on the low, perfect. Okay, cool. So from here, like what you would do then is you would have a couple sources of confluence here, right? You'd have your slightly upward sideways channel here, right? That's been very well respected. You could see that the bottom and the top are both very well respected. So you could say, hey, if price gets into here, I know that this one this 1-to-1 marks the same length of time as the previous bull run, right? From here to here would mark the same amount of time. And we have our channel here. So I would say, hey, look, if we get up to this zone, I think that this may mark the end of the bull run. It's possible, and I think this may be a good place to short, right? And then you can, we'll go ahead and hit play. And you guys, of course, everyone knows how this played out. But just to show you, thinking ahead, right? You would look at that, and you would say, okay, this is where I want to short, right? And look how well. I mean, you would have caught the very top, like to the week, right? If we zoom in here, I'll go ahead and hide this. You can see to the week, to the dollar. I mean, you couldn't get any more precise than that, right? So fib time sort of adds this new element to trading, right? We're so used to like price levels. Like when we get to this zone, we're interested in a short. But what would make it even better is this zone at this time, right? And that's what this Fibonacci time tool sort of adds to the equation. Okay, and it is usually best used on higher time frames, right? Here, I'm just gonna keep some of that up. So I'm just gonna hide this stuff here, and we're gonna move on to another example. So I'm going to end this replay. Yes, bring us back to our current time. You know what? Why don't we go back to here, and I'm gonna turn our channel back on. And we can say, okay, well, we just hit our 1-to-1 extension on our bull market. I think that we're probably going to be entering a bear market. We just had this massive move down. We're creating a bear flag. And you can ask yourself, well, how long do I think this bear market's going to go on for? Well, let's do another fib pull. So we're going to do a fib pull from the top here, right? The top to the bottom. And that's this bear market, right? So we were going to compare bear markets. I'm going to put at the top here, and we can say, all right, so the week of November 7th in 2022, and let's say, today is April, so we can say in, April, May, June, July, August, September, October, November, we can say in 6-7 months, 7 months or so, we'll be looking for a bottom in the bear market. All right. And then, of course, you can, add extra confluences and say, like, well, if I do, I don't know, let's see, what was a really good source of confluence that we had for that low? There was a daily level here. It's a little unfair because of course, I know what it is, right? So you could do something like this. Just as a, you could say somewhere in this zone, right? Say somewhere in this zone. There are, we could tighten it up if we wanted to. Like we could go down to, let's say, to the daily time frame, and we could go over here, and we could say, okay, I know this zone is a zone of interest for longs, and then I'm also going to add some, daily levels here, some untapped daily levels. We have one here. We have one here. Clone. We have one here. And we have one here. So actually I'm going to use this one. Yeah. Okay, so going back to our weekly time frame, we can say, all right, the 1-to-1 extension, and we have some of these daily levels here. We know that this general zone is a zone of interest for support, right? And let's go ahead and hit play. And you can say this right here, wherever we are, somewhere within this zone here, wherever we are, somewhere in this zone at this time frame, is where I'm going to look for a long, because I think that'll mark the end of the bear market. So we'll go ahead and hit play. And we all, of course, know how this played out. Back tested, got to move down, found support at the top of our rectangle, of our support rectangle. Okay, I'm going to pause it. Here, I'm just going to get rid of some of these future ones here. Look at that, right? The 1-to-1 extension on the week, right? So let's go ahead and to the week marked, well, at the very least, what we are now all considering to be the bottom, right? Because we've since gotten this move up, and now we're sort of moving in this price action up here, making this look like some degree of a deviation. So, I mean, look at how precise that was, right? I mean, to the day there. Okay, so like let's go ahead and we'll not hide this for now. Oops. Go ahead and hide that one and hide this one. We'll put these in a group. I'm going to take this out. So look at these two instances here where we have the very top marked to the week, to the very week. And you could have had this planned out years in advance, years in advance, right? And then you also have the bottom marked, again, what you could have planned for years in advance. Well, I guess you would have needed this top to come in. So it would have been, about a year in advance. You could have marked what you would consider to be the bottom. So it gives you, on the chart, it gives you some time confluence, right? Where you can look for like this intersection here, this daily and this fib time, this 1-to-1 extension, wow, boom, there it is, right? Right. I mean, to the very week, planned a year ahead, right on this mark. You had your zone. You saw this massive move down here, and you can say, wow, we just got this massive move down on this 1-to-1 fib that I've been waiting for almost a year now. I'm going to start opening long-term long positions, right? I'm going to open long-term long positions here and start buying Bitcoin, looking for more of a move up. And if you had done that, right, you would have been very happy. And the same can be said here. You can say, well, this is the exact time frame of the previous bull market. We also have this channel here as confluence. This is a really nice source to the week. If you had said here on this week, I'm going to start opening up some low leverage shorts, right, to hold for long term, or I'm going to hedge. I'm going to hedge my spot BTC longs here, because this is where I would consider what could be the end of the bull market, right? So this is a very powerful tool. I really, really, really like this tool a lot, and I use it very often. Not a lot of people. I don't think a whole lot of people use this tool or know how to use it, or at the very least, beginners certainly don't. Right? I'm just gonna, just for fun, let's do some. We'll do some marking out here. Yeah. So like this move here. Yeah, it's just really a tool to do some comparing, and you can go in here and just like what we did, we compared some bear markets, right? We compared the last two bull runs and the last two bear markets. Not to say that we're out of one per se, but just those downtrends, right? The significant downtrend before some degree of relief. We took a look at comparing them, and there's I mean, it was to the week. You can't get any better than that. I do also want to point out you can use this on a lower time frame. Again, like if you want to, do some comparing and say, the length of this sort of sideways trend, or this one, and say, hey, if we were to have that same, degree of a sideways trend, where would we be? So you can click, from here, to here and put it up here and say, this is where that would kind of be that marker, or how long did this retracement last before we made new highs? You can mark something like that out, right? So from here to here, and you can sort of mark that out. The thing that where this gets a little bit more advanced is when you start talking about harmonics and Elliott wave. So harmonics, I'll put it to you this way. The reason that you can identify patterns and see trends on in price action is because price is to some degree harmonious. Okay, it's harmonious within itself, okay, or cyclical. And that's the exact reason why we were just able to do that previous bull run to this bull run, and we found that to the very week they were about the same. They were actually the same length to the week, and this this dump and this one here again to the week were the same length, right? So price is cyclical. It's harmonious. And when you're looking at price action and you're looking for some degree of like a trend in price action, or you're looking at, like say like this sideways consolidation and you want it to be the same length, like you can identify these things, and price will oftentimes like move in rhythm with that time frame that you markered out, right? If we want to see this sideways consolidation and we think that, around that time we'll revisit this channel, we can say, hey, I think that like what is this time? You can say like, hey, I think around this time frame is when we'll see that. Or even better yet, let's do this. We'll go from this, let's go to a weekly again. We'll go from this low to this high, right? So that's how long this bear market rally lasted, and we'll mark it down here. Okay, we'll go ahead and close out these later extensions and just leave it on the 1-to-1. So we can say, hey, this bear market rally was from here to here. I want to do that same thing from here to, and then it would be here, right? So if price reaches this area around this time, I'm going to be looking to take a short or hedge my position, any long positions I have, right? So that's using it in this way, that's what I would do. I would mark this week on my calendar, or set an alert for myself, right? That this week I want to be alerted and reminded that, hey, if price is at about 35K on this week, you're going to want to look to short that, right? There's a good chance, just based on the confluence that we have, there's a good chance that this zone will provide a good short opportunity that, we can then ride back down. So because price moves in this harmonious way, that's why they're called harmonics, right? Because a harmonic is supposed to be symmetrical. So if you draw out a harmonic and you want it to be symmetrical, you would use this tool to be sure that, time and price sort of line up where you want them to be. And that's why it's such a powerful pattern. Harmonics are so powerful because not only does it give you the price that the price that's supposed to be for a harmonic to play it out, but also gives you sort of the time frame, right? And that's why they're so powerful, and that's why this tool is so powerful in conjunction with other confluence. You can also use it for Elliott wave, which is something that we'll get into at a later date. But just to give you an example, let's just say theoretically, where am I right now? I want to go on to a daily time frame. Let's just say theoretically that this is a 1, 2, 3, 4, and we're looking for a 5. Oops, I don't know what that is. And we're looking for a 5. There are some rules, right? Like, for example, wave 3 can't be the shortest wave. So what you could do is this would be wave 1, and you would put it at the bottom of wave 2, and you would say, well, wave 3 needs to be longer than this. Okay, simple. Great. And it was, right? And you can compare and say, like, I think will wave 1 be about the same length as wave 5. So we can go, from here to here and put it at the bottom of what we believe is the bottom of wave 4. And we can say, well, I think wave 5 is going to resolve by the first week of March, right? I would say that it'll resolve somewhere around here. So like maybe we'll get, maybe we'll get something like this where it kind of pumps up, kind of goes like this. And then that's the end of wave 5, right? We would look for that kind of around this date. And what other sorts of confluence do we have there? Well, and I'm just trying to keep this as simple as possible. We also have, this we have this sideways channel here that could be, we can say if price is within this zone around this time, I think that this could be the end of our wave 5. I'm going to look for, some degree of a short if wave 5 is going to be about the same length as wave 1. But again, here's what we can do. We can say, well, I know that wave 5 has to be shorter than wave 3. So if this is wave 3, we put it at the bottom of wave 4. We can say that wave 5 at the very least has to happen before, March 30th, before this week. So it has to happen sometime before that, right? Because if wave 3 is the longest, that would be we'd have to have it to be shorter. So here's the thing. I don't want to, this isn't about Elliott wave. We'll talk more about this in the future. But my point is that this tool is what you would use to compare certain time frames of waves to get that harmonious price action for harmonics. And also just generally, I mean, you don't even need to use these advanced techniques. Just generally speaking, using price action to, just using this tool to compare and contrast price action, right? And you can do a number of things like I said, you can click here to here, and you want to compare, and you want to compare the length of this to the length of our current run, right? So we just did that because we went from here to here, and now we're comparing from down here to, it would be, to this line. But if you wanted to, you don't have to move this third one out. You could actually just go, let's say I want to see, if this is the top, what would the exact reflection of that be? So I'll just double click, right? I'll put my third click right on top of my second one, and I'll say, okay, this from here to here, that same length brings us to this date here, right? That's that same length. So maybe I would look for this downtrend to sort of start wrapping up around this time. And I mean, actually, if you look at it, it was, within let's take a look. Yeah, it was within the week, right? Because this low was put in here. So if you would have longed, that around that time, right? Within that, oh, this is a daily. So yeah, within 1 or 2 days, right? If we would have longed this zone here just based on this time, saying, hey, I think that, from here to here, I think that this same amount of time will probably give us a good long. Well, this is where at bottom, and yeah, I mean, it gave you a let's just, if you longed that day, I mean, you didn't, let's say you didn't even catch the exact bottom of the exact top, you probably would have gotten at least a 15% move, right? So you can see it's just a super, super powerful tool to use. And it's simple how it's used. Don't overthink it. You're just looking at price action and looking to compare and contrast certain, big pivot points to one another, right? With the additional source of confluence, like channels, other horizontal levels, fib fans, etc. Right? So I'm gonna try to keep this one as short as possible. Again, it's a lot easier for people to rewatch or for you guys to watch them if it's not a super long one. So we'll go ahead and close it there. Thank you guys for joining me today. Again, this tool isn't used. It's not a very common tool to use. A lot of people don't necessarily talk about it. I would argue it's one of the most powerful ones that you could add to your arsenal, right? Your trading arsenal. And again, you will get into, in the future, we'll talk about how it can be used for more advanced forms of technical analysis. But in the meantime, I encourage you guys just to play around with it, to compare, certain moves to other moves. Like we can say, like this consolidation, how long did that last? Let's compare it to, let's compare it to this consolidation, and you can just start to compare and contrast and see, some similarities and things that can help influence your trades. Instead of just being based on price or volume, now you can have the added confluence of time, right? So I hope that was helpful, guys. Again, I will be in the Discord all week. Later today, I will be releasing a market update. We have had a handful of trades that we've been doing this week already, and some that we're looking forward to. So I'll be sure to keep you guys updated. Enjoy the rest of your day, and thanks again for joining me.